What's up, guys? This episode of Roll Off Rundowns is all about insurance. And we brought in Toby Stubbs from Wisdom Insurance to talk about how haulers like you can get the very best insurance rates. Let's jump right into this episode. Hey, Toby, thank you so much for joining this episode of Roll Off Rundown. This one's a good one in my mind because lots of haulers have questions about insurance. And I think that haulers don't know what they don't know about insurance too. And most of them kind of think, hey, insurance is insurance. What else do I need to know? But what they will discover during this conversation is that not all insurance companies are made the same. Someone that specializes in insurance for dumpster industry and specifically haulers can make a huge monetary difference. So let's just start with, why is that the case?
Yeah, so definitely when it comes to getting the right business classifications and as well as vehicle classifications, I mean, when it comes to the insurance side of things, the devil's really in the details. And so what we see a lot of is our clients, before they come to us, is they'll go to their local BNI group, or they'll meet somebody at their church, or they know a broker or an insurance agent that they've dealt with for years. And so they'll go to them and say, hey, I'm starting up this, junk removal or dumpster rental business or whatever. And the local broker, because they don't have a big book of business and they don't work with a set of clientele that do this type of work, they really struggle to be able to go and find options that are available in their local area. And it has a lot to do with just not understanding what to call it and where to go, what insurance companies to approach. And then just once they do get to a carrier that will quote it, being able to navigate all the different pitfalls where things go sideways with these quotes. So a lot of times we'll see, hundreds, if not thousands, if not tens of thousands dollars worth of mistakes being made based off of these misclassifications, radius of operations, just all the different nuances. So the risk factor, and then the fact that it's high hazard. Insurance companies don't like companies that go to the dump. They don't like the idea of unlimited liability when you're, at the dump or even a transfer station. And so high hazard startups, those are just red flags with any insurance company. So being able to figure out and navigate getting started is really challenging.
Nice. So I think, working with someone like yourself that specializes in knowing exactly how to ensure haulers can save tens of thousands of dollars. And I think you'll share some stories here during our conversation, but I've heard them and it's pretty eye-opening, the numbers. But let's start kind of at the highest level. What are, typically the insurance coverage needs of those in the dumpster industry?
Yeah, sure. To get started, I mean, you definitely have to have general liability and you have to have commercial auto. So those are the two absolute, at a minimum. You have to have general liability cover third-party bodily injury and property damage. And you also need that just to work with any contractor, realtor, property manager. If you're doing cleanup, if you're doing anything where you're dropping cans on a commercial property, they're going to want to make sure that you have general liability in order to step on to their premise. And then the biggest exposure, without a doubt, is the commercial auto. I mean, general liability is relatively cheap. It might be $500 a year on up to $1,500 or several thousand once you get to a certain size in revenues and payrolls. But the commercial auto is the largest expense. It's the biggest challenge. It's where you're going to have the largest claims. And in this industry specifically, it's not the little claims that, it's not like there's a frequency issue. It's more of a severity issue. So when you have a loaded up truck that's, 20,000 GVW or 30,000, 40,000, and then you put, you fill it to the brim and you drive that down the road. When accidents do happen, they're very expensive. So the severity is what I think really drives the rates primarily. So those are the two basics. Now beyond that, you've got workers' compensation, you have inland marine, you have commercial umbrella, depending on what type of work you're doing. If you're working with net vendor or other companies that require those additional coverages, you can always buy workers' comp and really exclude yourself as an owner officer on the policy, and still pick up a work comp policy cheaply as a result of doing that. But it's all rated based off of payroll. And then inland marine is going to cover specifically like your cans, your dumpsters. It's going to cover against the physical damage, the theft, fire, wind, hail, all those types of risks. So it really just kind of depends. I mean, do you need those coverages to get started? No, not necessarily. And when we get a company started, we'll recommend that they don't. And unless you have a bank note on the cans or the dumpsters, you don't necessarily need to insure those. I mean, you can throw air tags in them and run them down if they get stolen. They also require a hook lift to steal. But they do get stolen from time to time. It just kind of depends on what your risk tolerance level is. And then also, are you going to file a claim for a $4,000 or $5,000 dumpster? So inland marine will cover that specific exposure. And then commercial umbrella just extends your general liability and your commercial auto and your workers' comp. And it adds $1 million layer over the top of those underlying coverages. And the purpose of an umbrella is just to increase your overall limits at a relatively less expensive cost, and to also comply with any contractual obligations that you might have with contractors or property managers or something along those lines. Apartment complexes, if you're dropping cans outside of apartment complexes, that property manager is going to want to see that you're fully insurance compliant before they let you come on the premises. So those are kind of the basics. There are a lot of additional coverages that you can, we can sell you the Lamborghini. Do you need the Lamborghini of insurance products? No, not necessarily. But there's employment practices liability insurance, there's crime coverage, there's pollution liability. And so it just kind of depends on your individual risk profile and what you're comfortable with self-insuring or, not getting coverage for at all. So
that makes sense. What's the typical cost for the, at like the type of coverage that these folks would need, and how are those costs determined?
Yeah. So, they vary greatly, surprisingly, shockingly dramatic. And a lot of it has to do with the state specifically that you might be in, like the costs in Texas or Florida. I mean, Florida is one of the most expensive states, so you can get quote ranges from 10 to 15 grand, 20, 25 grand, 30 grand. And in Florida, it's a no-fault state. You have a lot of population. You have a lot of uninsured and underinsured drivers. You have a hurricane pounding in there and causing $1 billion worth of damage every other year. You really have a lot of different risk factors that cause and drive those rates to be so high. A lot of the southern states, we see the rates to be kind of higher in the, we'll call it $8,000 to $15,000 range. Texas is one of the tougher states. Georgia can be. Louisiana is the worst. Louisiana, I've never seen a quote under 30 grand out of Louisiana. So that's wild. And then you have the Midwest, like where it's 4, 5, 6 grand a truck, 7 grand a truck, 8 grand a truck. So very different laws, very different, insurance practices in place. Ohio's monopolistic, so you have to buy workers' comp from the state. They are the only ones licensed to sell it. And then you have median states like Pennsylvania, Illinois, Wisconsin. Those are all going to be 5, 6, 7 grand, 8 grand a unit. Arizona, Colorado, similar. California is a really tough state right now. Washington can be. So it really depends on where you're at. And then the different rating factors. I mean, everything comes into play, including the credit profile of the business owner, because fiscally responsible people tend to be better risks than non-fiscally responsible people, right? So the insurance companies can tie that into their pricing models, and they do. And then everything from driver history to types of vehicles. Are you running 25,000 pound, F600s, or do you have Freightliners and Kenworths that are, 50, 60, 70,000 pound GVW trucks? And the values of the trucks too can really drive and determine price. The majority of the commercial auto premium in this industry really lies in the liability. So I would say that makes up like 80% of that premium. So the value of the truck doesn't actually impact it that much. If you buy an $80,000 pickup truck and trailer versus a $250,000, hook lift for 30 and 40 yarders, those prices can be dramatically different because of the GVW, but the value of the truck, one might be 2 grand to insure, one might be 3 grand to insure in terms of the actual value from a comp and collision standpoint. So it really kind of depends on all the different rating factors, what state you're in, and what kind of rigs you're running, that dictates and drives those differences.
So I heard a lot of variation, depends on where you live. I feel sorry for the people that are running a business in Florida.
Yeah, definitely. They feel sorry for themselves too, trust me. But I guess there's a cost of living in paradise, right? But I mean that Florida, I'm in Chicago, it's like 0 degrees right now. So I guess and there's differences too. They're working year round. There's just a lot. You've got companies that are up in New York and Maine and the northern states, and it makes it a lot more difficult. They're just not operating on the road anywhere near as much. So it really depends on all those different factors. But yeah, Florida's tough. Florida's a tough one.
So let's say, I'm a hauler and I either am looking for insurance for the first time, or after hearing some of our conversation, I need to go, make sure, sharpen the pencil and see if I can get a better rate. What do haulers need to prepare to come talk to someone like you?
Yeah, so you need a vehicle list, a driver's list, you need your basic info like your EIN, sales and payroll, understanding all of that. We actually have a questionnaire that we send out to every client. I can kind of share it with you here. Let me see if I can just pull it up. And the questionnaire is good just because it identifies all the basic characteristics that we're going to need in order to run a quote for a client. And we have it combined in just a one single junk removal and dumpster rental questionnaire. But I'll share that with you here. And it just asks for your prior insurance information, your basic business profile. So are you an LLC or an S Corp or a C Corp or sole prop? And then your EIN number, sales, what percentage of the time are you doing junk removal or demolition or dumpster rental? Because that really matters from a general liability standpoint. You've got to have a good grasp and understanding and go to carriers that are comfortable with those multiple exposures if you are doing more than just the dumpster rental. If you're just doing dumpster rental 100%, we have a super awesome, easy, relatively inexpensive option for you. And then the business profile, do you go to the transfer station or the dump? Like, we're asking all these detailed questions just because we know that when we go to the carrier site and we're shopping this out with 4 or 5 different companies, that these are all the detailed questions that they're asking. So we're trying to get all this information up front. That's just kind of how we operate. And then you have your driver's list, vehicle list. Do you utilize telematics at all? Because if and when we can get a discount for you, we're trying to negotiate that up front. And then the workers' comp info, and that's pretty much it. So those are the kind of the details that we're running through with a new prospect or a new client.
That's a good list. And I think we will link in this video, we'll make a checklist for haulers that are watching this so they can come prepared. So how about, if there's one thing that a hauler needs to know when they're looking for insurance coverage, what's the most important thing that they should know?
Yeah, I would say really making sure that you're doing your due diligence to ensure that the vehicle and the business classifications are the correct classification. Because really, we've had some nightmare stories. Like, we had a client who was misclassified as a trucking risk, and they were doing junk removal out in Hawaii, and they fell down some stairs and with a fridge and dropped the fridge on top of a car and smashed the car. And the claim got denied on the commercial auto side because they were in the act of loading and unloading, which is supposed to be covered under your commercial auto, but they were misclassified as a business entity. And so the commercial auto carrier denied the claim, and then the general liability carrier denied the claim because that was supposed to be covered under the commercial auto. So just making sure that you're not creating gaps in coverage and potential surprises for yourself down the line. That's absolutely critical. I would also say the next best thing is really protecting the integrity of a clean loss history. Like, you've got to you can't file claims in the beginning if there's a fender bender or a minor situation. Like, we had a client who backed into a gate. The video recording showed them backing into the gate. To repair the gate was $500. Insurance company called the client, said, "Hey, we got this video of you backing into the gate. Would you like a copy of it? We can send it over." This client's attempting to file a claim to get their gate fixed. Do you want us to go ahead and fix it? Guy said, "Yeah, sure, no problem." Didn't call us, didn't discuss it, pushed the claim in. His premium, he was in Florida, ironically, $32,000 he was paying. His renewal premium was $64,000. So he went up 100%. Now, a lot of that had to do with a bad driver that was linked to that, and they got permanently attached to that driver profile. But that renewal was, absolutely through the roof, and a huge part of that was preventable. And to file a claim for $500, $500 liability event, in my eyes, is just crazy. So I think if and when there's a scenario where you can work it out with a homeowner or property owner or whatever, or even if it's minor fender bender, it's really maintaining and keeping a clean record over time is going to better position you to save money on this commercial insurance, which can really be, it can be catastrophic with those types of increases to your overall operation. So, and that doesn't follow you just for 1 year. That claim history really follows you for 3 to 5 years. A lot of insurance companies will look back 5 years now, and at a minimum three, depending on how they're pricing and what modeling they're using. Two of the five carriers that we work with just do it based off of motor vehicle records. So no accidents, no tickets, fighting those tickets when you get a speeding ticket or something like that, getting a lawyer to get those reduced or removed. I mean, 100% worth your time and effort, because those are impacting the premium significantly, especially with carrier that scores or rates based off of that motor vehicle record.
Got it. To piggyback off of that, what if you're a hauler that does have, several claims and that 3 to 5 year period? How do you work with those folks that maybe they've been denied insurance with others, but they come to you?
Yeah, so I would say the immediate action needs to be an implementation of best industry practices, right? So you need to immediately implement a driver safety program. You need to have some real call to action to create a plan that will help mitigate or prevent future losses, and then create a narrative that then can be shared with an insurance underwriter for them to know and understand, okay, what got us into this position to begin with? What was the problem? Where were things going wrong? And then what are we doing in order to get out of this scenario? So, and then being able to, for us as the broker, to take that and go and pitch an underwriter like, okay, yeah, they've had this problem, but they've taken these actions in order to correct them. And as a move forward, they're going to be a better risk as a result of it. And we've fired the bad driver. We've replaced we've just eliminated the risk exposure that was creating the problem for the client, or at least mitigated it in some way. So I would say that that would be our approach to that scenario, and then just dealing with it on a one by one case basis.
I like that a lot. Telling the story and with your actions that's great advice. What about, like, if I'm a hauler and I'm hearing this conversation today and I just went with the local, insurance agent, and then I'm coming to you, what do you typically see wrong with the policies of haulers that did go that local agent route?
Yeah, it's wild. I mean, definitely we see the biggest one is a misclassification of the actual business. So your local guy, I'll give you a great example, is like Progressive site. Like everybody has Progressive. So the local guy is going to end up and you more than likely are going to end up with a Progressive quote. But here, let me show you just how these kind of quotes start and these quoting platforms start. You can see I'm coming in here, I'm saying, hey, policy is going to start, next week, whatever. And then do you have a DOT number? So this question right here, just right out of the bats, if you have a DOT number, or you are applying one within 60 days, that's a 25 to 30% increase in the quote that you're going to get as a result of applying for a brand new DOT number. And the DOT filings can really make a big impact later down the road, with how insurance companies view and classify and categorize your business. So if and when you can avoid, obviously, DOT, or you're under DOT requirements, whether it's state or federal, that is the best route to go. But there are a lot of times where you just can't, where you're crossing state lines, or you have a vehicle that requires DOT filings for whatever reason, and you do have to apply for that. And then this is where everybody goes sideways, because if you're typing in just the word dumpster rental, and you're trying to find a business classification underneath this um, uh, as soon as you type in the word like trash or dumpster, like what comes up are class codes that you should not be classed in. And this is the biggest problem, is that when you type in dumpster rental, nothing comes up. The only thing that comes up is dump truck driver for a fee. Well, that's not the correct classification. If you type in dumpster, that nothing comes up. So they end up, the local broker, instead of picking up the phone, calling underwriting and finding the correct classification, they're typing in all these keywords that they think is going to be the right classification. But debris removal is a great example. Debris removal is for the junk removal guys. This is the classification they should be using. And these rates run 30, 40, 50% higher than the dumpster rental rates. So when you're typing in debris removal and classifying under trash or debris removal, trash removal is the local valet trash guy that goes door to door. Say you typed in container here. Container hauling, this is like a shipping container hauler, not the correct classification. So there are just so many different points where this business classification, and it's different for each company. So knowing how to navigate this is very, very difficult. The other mistake that we see a lot of times is just the classification of the actual vehicles themselves. Is it a flatbed? Is it a step van? And we see we'll see roll-off dump trucks being classified as pickup trucks or step vans or whatever. So it's the lack of knowledge and understanding of which rates are the better rates and their inability to get this accurate. And when it comes to the actual premium, or the coverage rather, the accuracy 100% matters. So really, that's the biggest thing. We probably take over and just fix 50 progressive policies a year, where we're just having a client fill out an agent of record letter and appointing us as their agent, and then we go behind the scenes and fix all the issues that are going on. We see incorrect radius of operation. Most of these guys aren't going over 30, 40, 50 miles away from their primary address. So that absolutely impacts significantly the rate. So if you have a 200 or 300 radius of operations, we've seen those on policies where it's just mind-boggling as to why the agent or the broker might have selected a larger radius of operations as opposed to the accurate one that the client is actually driving. And for a lot of carriers like Progressive, their stance is if 90% of your business is within this radius, then you qualify for that particular radius. But it's different for each carrier. And really knowing how to go in and navigate this is a mess. It's a nightmare, and it's very challenging for the local agent who doesn't know and understand this business. And that's where we see a lot of mistakes being made. So that's a pretty good example.
That's a really good example. And, I think that just having the expertise of knowing what to pick, just picking the wrong thing could, like you said, could cost you tens of thousands of dollars. That's a big deal. So, along the lines of that, if I'm a hauler coming to you today and we're sitting down to have a conversation, how do I get the best rate?
It's really going to boil down to your risk classification characteristics. One way that you can improve on those rates is through the use of telematics, a good driver screening program, making sure that your drivers are taking routine safety, pre and post vehicle inspection reports, driver facing and forward facing cameras, those types of little things that add up in the end of the day to significant discounts with Progressive specifically, they offer a program called Snapshot ProView. You get a guaranteed 5% discount for participating in it, up to 20%. They can't take adverse action against you. They can't raise your rates. They can't cancel your insurance. So it's just knowing and understanding all the little details that go into each and every carrier and their quotes, and then taking advantage of everything that you possibly can. If you can afford to pay in full, maybe instead of a 12-month policy, you go for a 6-month policy, and then you pay in full and you save an extra 10 to 15% that way. So there are a lot of different, nuances along the way that, like you said, if you just don't know, you don't know. So you're not taking advantage of these potential discounts that are out there and available. And that's the thing that we really try to take the time teaching and coaching and educating each client on, are those little tiny nuances from each carrier. So we're going to run the quotes. We're going to go to our, we've got 4 or 5 options now, almost in every state. I mean, in Florida, there's only 3, but we've got Acuity, we've got a lot of carriers that we partner with that. And each one is different. Each one has different nuances. Acuity requires 3 years in business. They require, they want to see a relatively clean loss history. They're going to classify things differently than a Progressive will, or, some of the other carriers that are out there. So it's just figuring out and then navigating. Once we run all those 3 or 4 or 5 quotes and we come back to you and say, hey, here's what we recommend, here's our best option, then we work with the individual to try to keep that quote down as much as possible. So that's what I would say.
That's great. Do you have to be a certain size business to take advantage of working with a specialized broker like yourself?
Yeah, no, I mean, I started this from zero. I made nothing for 3 years while my mother-in-law paid my groceries, and we, fought for a lot. I mean, whether you've got a pickup truck and a trailer and you're just getting served, and I would say we have a lot of clients that find us and come to us that are startup, and they're really needing help trying to navigate this space. We also have a lot of clients that are big franchise, and they've got a team of drivers and a fleet coordinator and 10, 15, 20 trucks. We work with those clients as well, but yeah, we're in all 50 states with it. There's nobody we can't help, I feel like, out there. California is really tough. They passed a recent law that makes it difficult for the insurance companies at the landfills. So I only know of like 1 or 2 options in California. Outside of California, the majority of the states, we're going to have a minimum of 3 carrier options, and as many as 5, 6, depending on where the client's at and how long they've been in business, and if they have claim activity or not, all of those kind of details. So
that makes me think, are there preferred carriers for the dumpster industry?
Yeah, there definitely are. Those carriers are going to require 3 years in business. They're going to want to see a clean loss history. They're going to offer the general liability, the commercial auto, the commercial umbrella, and sometimes even the workers' comp, all under one roof. They offer 12 equal installments, so there's not this big coming up of this huge down payment or a fluctuation from a cash flow standpoint, which is really nice. And then 2, they'll tend to offer a lot more ancillary types of throw-in coverages that you're not going to have available to you as easily with piecing it all together. So there definitely are. Obviously, you've got to be established. You've got to have a clean history and record, and be what I would consider a preferred risk to qualify for those preferred options. But when it's a good fit, they're going to be 10, 20, 30% lower from a rate standpoint, and the value is really there. So
that's great. So final question, If we had a crystal ball and we were to look into the future, what does insurance look like for the dumpster rental industry?
Yeah, I would say, I mean, the my opinion might be jaded because I think I'm optimistic in general. But from what I've seen, and I started in 2013. In 2015, I wrote my first junk removal account, and then for the last decade, we've worked on junk removal and dumpster rental. In the last 5 years, it's all I work on. So we're writing hundreds of clients all over the country. Over that time frame, we saw when we originally started, we had like 7, 8 different companies we could quote with. Like, Progressive was one of the last options we would go to. Then we saw that list just slowly peel off and peel down. State Auto went away, Nationwide went away, Liberty Mutual shut it down, and that long laundry list crept down to like 1 or 2 companies. And really, for almost like a year, Progressive was the only one that would do it. And since then, in the last couple years, I would say 2 or 3, we're starting to see more companies come out of the woodwork. We're starting to see local regional carriers pop up in different parts around the country where they're, dipping their toe into the industry as a risk and starting to write some of it. So I'm optimistic that we're going to continue to see more companies come into the industry and provide that competitive environment so that people don't have to be handcuffed to these 1 or 2 insurance options that they have. So I think that we're going to see more and more carriers and more competitive carriers as over the course of the next couple of years. And that will allow people to not have to just renew up. And insurance companies are still going to take their 10%, 20% increase. They're still going to adjust rates based off of claim activity and what's going on from a loss standpoint. So none of that's going to change, but it's the ability for the marketplace to provide a competitive market where we can stay ahead of those increases as a result of moving you around to the most competitive option in your scenario. So that's what we do as a broker, that where we're trying to stay ahead of that and how we manage it. So
that's great. Well, Toby, I just want to say thank you for being on this episode. It's definitely chock full of really good information. And I know this is the stuff that is a bit in the weeds that just, if you're a hauler, you don't know this stuff. And so thank you for helping our audience. I'm going to link Toby's information from Wisdom Insurance. If you'd like to get in touch with him, it'll be attached to this video. But other than that, thank you so much, Toby.
Hey, thanks, Matt, so much for having me on. I really appreciate it. And I get it. Everybody hates insurance. My goal isn't to make them love it. I just want them to understand it so that they're making the best decisions possible for their business, and they're taking all the different insurance factors into consideration in order to help keep their premiums down over time. That's my goal. So I appreciate you, and thanks for having me on.